I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. Tuesday, May 25th, emergency Tech Talk here, hence the casual attire. I know we just did one less than 24 hours ago, but with the volatility in the grain markets, I wanted to revisit two of the charts that we looked at just yesterday. This first one being July corn. Now, for over a week now, we've been talking about the potential for a bearish head and shoulders pattern forming. We got the failure in the right shoulder rejection here at the end of last week, and we got the breakdown point here today. This support with 640, which is where we really started to accelerate in today's session, taking us down to limit down at one point for the July contract. Now, we didn't close limit down, so we won't have expanded limits, but this certainly puts the bears in the driver's seat going forward. Previous resistance was 670. Now resistance is going to be at the 640 area. Remember, previous support now becomes resistance. We're marking lower highs and lower lows. The bulls really need to get consecutive closes back out above the breakdown point, 640. If they can't do that, there's really not a whole lot of significant support until you get down to this 550, 560 area, which is really where we started breaking out of in the middle of April. So we would not be surprised to see this long liquidation from the funds continue to drift this market lower, especially if they can't get any traction back above that 640 level. There's obviously a lot of people scratching their heads saying, well, why is the market selling off so hard? Well, a lot of this isn't headline driven. This is just longs exiting, and potentially we overshot fair value to the upside, and there's a potential that we overshoot fair value to the downside before we find an equilibrium for this market. Now, we are a little bit more upbeat on that new crop contract. December new crop sales have been phenomenal to China so far. If we continue to see that be a trend, wouldn't be surprised to see that December contract narrow the gap with old crop here in the near term. But from a purely technical perspective, and since this is a tech talk, it looks like we've got confirmation of a bearish head and shoulders, which is something we've been talking about here for the last week. Now, for beans, a little bit different, been a little bit more upbeat, but we've been talking about support coming in down in the low 1490s to the psychologically significant $15 handle. We do think that this will probably hold on the first test and could potentially lead to some consolidation up into the mid 1550s and potentially a retest of this breakdown point 1575. These markets are going to be very wild though, so you're going to want to trade accordingly, and that may mean paring back your position size. If you're used to trading 10, 15, or 20 lots, maybe you're just trading 2, 3, and 4 lots for the time being until we start to settle down a little bit. So a little bit more upbeat and think that soybeans can stabilize, but again, you got to understand before you enter a trade, you got to know, where could I be wrong? Well, where you would be wrong is if we broke and closed below this 1486, 1490 area. Break and close below there really opens the door for another leg lower towards that 1440, 1450 area. So I just wanted to touch base on those two charts. Those are some of the levels we're looking at going into the midway point of the week. If you've got any questions, feel free to reach out to us. You can send me an email directly, oliver@bluelinefutures.com. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.